Have you ever wondered why some people can transform $100,000 into $1 million while others stay stuck in the same financial position for years and years? The answer is not luck. It is not winning the lottery. And it definitely is not waiting for a miracle to happen in your life. The truth is, there exists a fundamental difference between someone who has $100,000 and someone who conquers their first million. Today, you will discover exactly what that difference is and how to apply it to your financial life in a practical and immediate way. If you have already managed to save your first $100,000, congratulations. You have completed the hardest part of the journey. But if you have not reached that point yet, do not worry. What I am going to share today will drastically accelerate your journey toward complete financial independence. In the next few minutes, you will understand why experts say reaching your first million is easier after 100,000. You will learn the exact strategies that real people are using to multiply their wealth. And most importantly, you will leave here with a detailed step-by-step plan to transform your financial situation in the coming years. Let us start with a truth that will completely change your perspective about money and investments. There exists an invisible force working in favor of anyone who has money invested. This force is called compound interest. Albert Einstein called compound interest the eighth wonder of the world. You will understand exactly why he made that statement. When you have $100,000 invested, something truly magical happens. Your money begins to work for you in a way it never worked before in your life. Let us look at real numbers so you can understand how this works in practice. With current Treasury bill rates around 4.5% annually, your $100,000 earns approximately $375 per month just from interest. But here's the secret that few people understand. Those $375 will also earn interest the following month. In the second month, you no longer have $100,000. You have $100,375, and that $100,375 will earn even more in the third month. It is like a snowball rolling down a mountain. It starts small but gains force and size with every foot it travels. Now imagine this happening month after month, year after year, consistently. Financial experts at major investment firms have run simulations that will open your eyes to the real power of compound interest. If you start with $50,000 and achieve a 10% annual return, you reach $100,000 in just 7 years. But here's the interesting part. To double from 100,000 to 200,000 takes only 7 more years. To go from 200,000 to 400,000 takes another 7 years. And to jump from 400,000 to 800,000 takes just 7 more years. Do you see the pattern here? The time to double your money stays consistent at about 7 years. But each doubling represents increasingly larger dollar gains. Your first doubling adds $50,000. Your second doubling adds $100,000. Your third doubling adds $200,000. Your fourth doubling adds $400,000. This happens because compound interest gains exponential force. The more money you have invested, the more money your investments generate. The faster your wealth grows in an accelerated fashion. But having $100,000 is not just about numbers and financial mathematics. It is about a fundamental change in your financial mindset. When you reach this milestone, you need to stop thinking like someone who is saving money and start thinking like someone who is building real wealth. The difference is subtle but extremely powerful. Someone who is saving money focuses on economizing, cutting expenses, and storing every penny they can manage. Someone who is building wealth focuses on making money work, multiplying resources, and creating systems that generate passive income automatically. This mindset shift reflects in 3 main areas of your financial life. First, your relationship with risk. When you have a solid base of $100,000, you can begin to diversify into investments with greater return potential. I'm not talking about betting everything on individual stocks. I am talking about creating a balanced strategy that combines security with sustainable growth. Second, your time perspective changes completely. With $100,000, you're no longer racing against the clock to save money desperately. You can think in longer terms. This opens doors to investments that really make a difference in the long run. Third, your ability to take advantage of opportunities multiplies. With a solid reserve, you can invest in financial education, courses that increase your income, or even business opportunities that appear along life's path. Now let us get to what really matters, the practical strategies you can implement today in your life. The economic scenario of 2025 offers unique opportunities for those who know where to invest their money. With the federal funds rate at 4.25% to 4.50%, U.S. fixed income investments are offering solid real returns. Treasury bills are paying around 4.5%, which means conservative investments like CDs and Treasury securities are paying well. For someone with $100,000, this represents passive income of approximately $375 per month. But here is the intelligent strategy that few people apply. Use this passive income to accelerate your contributions. Instead of spending those $375, reinvest everything. With this approach, you are effectively doubling your investment capacity without compromising your personal budget. For someone who wants to reach $1 million in 15 years, The numbers are clear and objective. Depending on your investment strategy, you need monthly contributions between $3,000 and $4,200. Does that seem like a lot? Remember that a significant portion of this amount can come from the returns on your initial $100,000. Let us look at a practical and detailed example. If you have $100,000 earning 4.5% annually, this generates $4,500 per year in interest. Dividing by 12 months gives you $375 monthly. If you can contribute another $2,500 from your salary, you already have $2,875 monthly in investments. With an average return of 8% annually, this takes you to $1 million in approximately 15 years. But there exists an even more intelligent strategy. As your investments grow, passive income also grows. In the second year, you might have $450 monthly in returns. In the third year, $520. This means you can maintain the same contribution from your salary, but increase total investment automatically. But do not make the fatal mistake of putting everything in one place. Diversification is your best friend on the journey to your first million. The secret lies in creating a portfolio that balances security with growth intelligently. For 2025, a balanced strategy might include 30% in fixed income, 50% in variable income, and 20% in real estate investment trusts. In fixed income, focus on treasury inflation, protected securities to protect against inflation, and CDs from solid banks that pay above market rates. In variable income, consider shares of established companies that pay good dividends. The American market has attractive prices, and many companies are paying dividend yields above 3% annually. This means that besides stock appreciation, you receive regular monthly or quarterly income. Real estate investment trusts are an excellent way to diversify and generate consistent passive income. With the real estate market recovering, many REITs are paying interesting monthly dividends, some above 6% annually on invested value. But here is a secret few people know. As your wealth grows, you can begin exploring international investments. With $500,000 or more, it makes sense to have part of your wealth in international markets, whether through international ETFs or foreign real estate investment trusts. Now I will share the most common mistakes that can completely sabotage your journey to your first million. The first mistake is impatience. Many people, when they see money growing, become anxious and start making emotional decisions. They sell during market lows, buy during market highs, or worse, withdraw money for unnecessary expenses. The second mistake is not considering inflation and taxes. That million you will have in 15 years will not have the same purchasing power as today. Therefore, your real goal should be slightly higher, considering accumulated inflation over the period. The third mistake is not reviewing your strategy regularly. The market changes, the economy changes, your life changes. It is fundamental to review your investments at least every 6 months and make necessary adjustments according to circumstances. The fourth mistake is not having discipline with contributions. Compound interest only works if you are consistent. Skipping a month here, another there, might seem insignificant, but makes an enormous difference in the final result. The fifth mistake is not educating yourself continuously. The financial market evolves, new products emerge, new opportunities arise. Those who stop studying fall behind. Now I will give you the complete plan, step by step, to go from $100,000 and reach your first million. First step, organize your financial foundation. If you do not yet have $100,000, focus on this as an absolute priority. Cut unnecessary expenses, increase your income, use your tax refund, bonuses, and vacation money to invest. Second step, build your personalized investment strategy. Define what percentage goes to fixed income, variable income, and real estate investment trusts. Start conservatively and increase risk as you gain experience and confidence. Third step, automate everything possible. Set up automatic transfers to your investment accounts. Treat your contributions as a mandatory bill, not as something optional you do when money is left over. Fourth step, educate yourself continuously about investments. Read books about investing. Follow specialized channels. Take courses. Knowledge is the best investment you can make in yourself. Fifth step, monitor and adjust your strategy. Track your results monthly, but do not make emotional decisions. Make strategic adjustments only when necessary and based on concrete data. Sixth step, maintain long-term focus. Do not let yourself be influenced by alarming news or market euphoria. Your strategy should be solid enough to resist normal market fluctuations. We have reached the end of this journey. Now you have in your hands the knowledge that can completely transform your financial life. You discovered why $100,000 is the turning point. You understood the power of compound interest. You learned specific strategies for 2025. You have a detailed step-by-step plan to reach your first million. But knowledge without action is just entertainment. What will make the difference in your life is not what you learn today, but what you will do with this knowledge starting now. If you do not yet have $100,000, start today. Open an account with a brokerage firm. Choose your first investments, and set up automatic contributions. If you already have $100,000, it's time to accelerate. Review your strategy, diversify your investments, and focus on the long term. Always remember this. Financial success does not happen by accident. It is the result of planning, discipline, and consistent action. Your journey to your first million begins with the first step you take today. If this video was useful to you, leave your like so more people can discover these strategies. Share it with someone who needs to hear this. Subscribe to the channel so you do not miss any tips that can accelerate your financial journey. In the comments, tell me what your financial goal is for the coming years. Do you already have $100,000, or are you still working toward it? Your answer can inspire other people who are on the same journey. Until the next video, remember that your financial freedom is closer than you imagine.